If anything, I'm punctual. All right, let's get started here. We'll start with a disclaimer. Everything here is for educational purposes only. You should examine your own circumstances to determine the suitability of exercising any trading strategy we discuss here. And trading involves the risk of loss of capital. A little bit of background about me. I'm an ex-Air Force fighter pilot with master's degrees in both computers and in business. Been an active trader since '98, full-time trader since 2009. A technical trader, used limited fundamentals to guide me, primarily trading earnings, that kind of stuff. I'm a moderator for H&R Hit and Run Candlesticks from time to time. And I do provide one-on-one mentoring. You can go to the website if you want to speak to me, free consultation. All right. There are three basic pillars to Hit and Run Candlesticks. They have a daily blog, and Hit and Run Candlesticks basically talks about swing trading of stocks and right way options, as the name implies, options related. Daily options trading for either swing trades or position trades. And the third pillar here, the third leg of the stool, is the live trading alerts, LTA, the scanner. And I'll talk about some special offers at the end of the presentation, so stick around. Agenda and economic calendar and earnings calendar, as usual, and we'll go over a little bit about the market view and some trade ideas. We'll do a Q&A. The Q&A that we do first will be not stock specific, so don't want you to put down any symbols there. Wait till I put up the plus signs. And you have 20/20 vision, right, Chris? And then we'll look at your stocks one time permitting, and please let me know whether you're long or short or looking long or short. All right, here are the economic reports. We have nothing on Monday. We have international trade at 8:30 on Tuesday, factory orders and ISM antenna on Tuesday. ADP report along with the petroleum report on Wednesday. The weekly jobs numbers off at 8:30 on Thursday, and the employment situation is out at 8:30 on Friday. I believe that's for January. I could be mistaken. It's usually the first Friday of the year, the month, I mean, but since we're just into the year, I think they may have delayed it by 1 week. Earnings. Very, very light week this week, but next Tuesday we get the kickoff with Citigroup. Who else is going to report there? Yeah, next week we've got Citigroup, JP Morgan, Wells Fargo, and that basically kicks it off. Bank of America the following day, Goldman Sachs. So we basically start with the big banks being money center banks next Tuesday and Wednesday. So we're back into earnings season. That's my favorite season of the year. Notable earnings. One is Bed Bath & Beyond here on Wednesday, Thursday, and it has fairly high short interest. I believe when I checked that was something in the neighborhood of a close to 50% of the float is short. So if there's any kind of a rally, watch. If there's any kind of surprise to the upside, watch for a rally there. Let's do a quick market overview. And I'm going to start off with crude oil, which is up another $1. Friday, actually, let's go to a 6-month chart. We started our rally somewhere around the first part of December, and we really have not looked back. We did, we kind of paused here about 59.50, paused at around 61 and then 62. And obviously with Thursday, Friday's news about the Middle East attack against the Iranian general. We've been heading north ever since and not looking back. The stochastics RSI that I use here, along with the volumes, are telling me we've only just begun this rally. So a lot of it could change overnight, but I think it's going to take a while for all of this to settle down. All right, let's look at gold. Gold also was in a bit of a rally over 1520. I participated in the rally using GLD from back here around 1490, and when it got back up here to about 1520, did these dojis here. I exited stage left. Little did I know we were going to have turmoil in the Middle East, and I should have held on to some. I did not get a true sell signal, and that was not following one of my rules. And you'll see in my presentation later, we're talking about what am I going to try to do a little bit differently here in 2020. A New Year's resolution, right? And obviously with tension in the Middle East, oil and gold both skyrocketed here. All right, let's go look at the S&P, the equities. We're down pretty substantially overnight. Let's go back to a 3-month chart. We are still in an uptrend. No matter what I say tonight about the short term, the longer term trend, the 50 is pointing up, the 100, the 200, even the 17 are pointing up. They're starting to flatten out a little bit. We're only in a little bit of a pullback on the 3 to 7 day period. So if we pull back to this 3200 to 3190 area and then start to rally again, which Stochastics says we can do, we could go back up to the highs again. This market, don't let anybody fool you. This market has been so resilient. It has failed to succumb to all of the pressures on it from all different sources. So trade the chart and let it tell you. Now, that said, on Friday, the Friday's candle wasn't really very bullish at all. And this gap down tonight, if it holds, depending upon how it finishes, unless we can get solidly back inside this line around 3230 to 3250, 60, something like that, this is still kind of negative in the very, very short term. Now, all bets are off. We could change if we get below the 3200 and then pick up a couple of down days and start making lower lows and lower highs. So the key is, as long as we make higher highs and higher lows, we're in an uptrend. The downtrend would have to probably make a lower low below this 3205 level-ish, somewhere in that area, and fail to get above 3260. All right. Let's go on over to the Dow. Dow pretty much looks like the S&P, except the stochastics did not have as much of a zigzag here at the bottom. It had that 1 day fake on Thursday, and then big hard sell-off, which is not mom and pop. The high volume on Friday pretty much looks like S&P. After the close on Thursday, we had a pretty substantial rally in the NASDAQ, and the NASDAQ led us up on last Thursday. And we had a nice solid breakout on decent volume, but then obviously we pulled back hard. The NASDAQ was able to close within the body of the prior day, but we are kind of pushing the lows a little bit. So all three of the top three dogs in the major indices are looking very similar, and stochastics RSI are all down around 20 or so, which means we have the capability of doing a bounce. Right now, the only thing I can think of is that it might be a bounce. Again, short term. Russell looks a lot weaker. Now, again, it's been the weak sister for most of 2019. Although towards the end of the year, around November timeframe, it started to actually be the leader into the end of December. And then even before we had any of the turmoil in the Middle East, it started to look a little weak. If you look at the days and compare the Russell or IWM to how the NASDAQ and S&P did on, say, the Thursday of last week, on the 2nd, it didn't do very well. It didn't do very well at all. I mean, it did not participate in the rallies to new highs. So that was a bit of a cautionary note to me to say, hang on. Now, the Russell tends to lag mostly. It doesn't lead most of the time. So the fact that it's leading lower may or may not be a big deal. It would be a big deal if you're trying to trade the small caps. The VIX, we shot up around 16 and pulled right on back to 14. Even on Friday, we pulled way back. Now, the stochastics RSI implies that the VIX can pull back further. That kind of flies in the face. We'll see what the VIX does when we open tomorrow. But if it gets above 15 towards 16, we could go back up to 18 in the near term. So watch this level here around 15. Watch the level at 16. And above that, we're really looking at 18. Okay, let's go back to our slides. Okay, here we go. Okay, got some trade ideas. I do have more longs than I do shorts, but the caveat is they have to give us buy signals. Let's go back over there again. And these are in alphabetical order, not necessarily by... Why do I have APTV on the longs? That is not... AppTV was supposed to be in the shorts. Sorry. And let's take that one out of there. Let's go to Cerner. Cerner has been holding on quite strong, even with the markets kind of giving them back on Thursday, Friday. There have been a few that have done that. I was lucky enough to be into on a couple. Yeah, I mean, let's go to TC 2000 and look at that. Let's do copy shorts. Let's remove that one. All right. Oh, what I want to do first is I want to look at the T2122 under the lines. We've been pulling back. I suspect us to pull back into the 50 to 60 level and then maybe do a bounce. And then if we're going to go lower, obviously we'll break the 50 level, or we could bounce right back up towards the highs again. So I'm going to watch this pretty closely to see. Normally I see that we get up into these 85 to 95 levels for pullbacks, 20 to down to 7.5 or so. Usually gives us a bounce. Doesn't tell us how deep the bounce or the pullback is going to be or how long it's going to last. Just gives us a heads up. And then it also tells me about the breadth of the market. Now, there are other indicators out there, but I use my own interpretation of it. Do we have a significant percentage of the markets stocks going up or going down? Are they participating? Cerner, we're looking for a move over to 74 to move up to 76 and a quarter. And like I said, it's been quite strong for some time. Balance of Power was strong coming off the bottom when it did its last earnings report. Since then, it's just kind of been neutral, but we've been grinding higher. And price is king. Was it, they say in real estate, location, location, location? Well, in stock trading, it's price, price, price. Clorox, if we get over 153.75 to 154, we could try to attack these incremental levels into the 160s. CMRE, shipping and ports, nice bullish engulfing on Friday. We've been coming up. Balance of power has only been kind of marginally acceptable, so that's not helping us. Stochastics RSI is curling up from the low. If we go look at a 3-day chart, you can see how we did a little bit of a pullback and then a move up. And you look at the weeklies, it doesn't help us much at all. But that bullish candle on Friday, look for a move above 10. Where could it go? You know, we're probably maybe looking at the 11s or so before we run into big resistance here. Let's go to a 5-day chart. The weekly. Yeah, we're at that $10 level. We could be extended. Now, you notice how the balance of power here on the weekly is a lot stronger than it is on the 3-day. Well, sorry, than the daily. But the 3-day gives us a different view, balance of power wise, and the weekly gives us a different view. That's why I like to use multi-time frame analysis. CBA. Covanta. Looks like it's trying to do a rounded bottom breakout. The first target would here be around 16, and the other one would be either 17 to 17 and a half. Curling up from the bottom on the stochastics RSI. Let's look at a 3-day chart. Not really much help. The weekly showed a little bit of a strength. We kind of did that bottoming process. So, yeah, it doesn't report again until February. So this last October time frame was when it reported and it moved down. Looks like it's trying to recover from that. We'll have to wait and see. A couple of credit services, MasterCard and Visa, are on the list here. In the past couple of months, any of the pullbacks down towards this 8 and 17 exponential moving averages have been buy opportunities. Could this be another buy opportunity here? I don't know, especially if we gap down and move down. So maybe 296 or so if you were looking for a position hold. Going to jump down here to Visa. Pretty much the same. Look here at a 3-day chart and look at the weekly chart. Again, all-time highs. 3-day, 1-day. Let's go back to MasterCard. 3-day, weekly. Both really, really strong. The consumer was out in force this holiday shopping period. Microbot, medical instrument supplies, high volume, not for the faint of heart. The average shoe range is $2.30 per day, 19.9. Let's call this 20% in a day. I believe, because of the volume spike here, let's go look at an hourly chart. We're probably going to go back up and retest this 19 and a quarter. I can guarantee you it'll probably go back up to the 16 and a half or so. Has MBOT done the pump and dump? Let's see about that one. Well, back over in here, it had very little trading, 100,000. And then it kind of picked up and drew down to 48. Yeah, I looked at the pattern and didn't look as much on the volumes. Almost all this volume is here lately. If you will allow me to, I'm going to remove that from our list. It's not, if you've got speculative money, you want to purchase 100 shares or whatever, we're probably going right back up here to 16 and a quarter. You can make a couple $100 and then only use speculative money. But I'm going to take it off the list. I was just looking at the chart here, and then I looked at the volume. I did not. I apologize. And the balance of power, I did not go and analyze it that deep. Well, let's see. Triple M. Made some money here from about 170 to 178 or so, and then bailed out. It went up on Thursday, and it held in quite nicely here on Friday. Watch for 3M to go back. Probably, yeah. I'm gonna move this one up to this 187. I'm gonna call it 75. I think that's where it's headed. How many of these stocks are optionable? The vast majority of them are. The question of being optionable or having good options is a different answer. Good options mean that it have the spreads, trades enough volume, have enough open interest, and we'd have to look at individuals. 3M is really good. NXPI. Let's watch for this pullback here. Let's see if we can curl back up. Let's grab. Come on, let me grab my crayons here. So we moved up. We did a pullback. I'm looking for the curl back up and using the swing high as my first target. Tight stop, sell, and then see if I can ride it up to new highs. That does presuppose that we go higher and that we get a buy signal. Right now, it's not ready. Some people are accumulating this one, so I want to keep it on my watch list. Ping. Ping did basically the same thing. Moved up. We did sideways until we gapped down on Friday and then moved higher. So instead of moving lower as the market did, it did also recover. If we get up over, let's say that $25 level here, I'm looking for a move to all-time highs. Again, has a very short life cycle at the moment, trades reasonably high and average to range. Percentage is about 5% of the total cost, so it's a little high, but 800,000 shares. You could size your position accordingly to control your risk. Planet Fitness looks like it's probably going to go back up to this $78 to $79 level, up towards there. Every time we've done a pullback since the November timeframe. Back over here in, was it July, August, reported earnings, they didn't like it. It went down, it did this bottoming process here, and what I want to do is I want to show what I'm talking about. A bottoming process is it goes down, it makes a bottom, comes up, higher or equal highs, higher low from here to here, new high, equal or higher lows, new high, new low, new highs, new lows. Now let's go look at the 3-day chart, and let's look at the weekly chart. This weekly chart to me looks an awful lot like an inverted Head and Shoulders. Head, shoulder, shoulder, or neckline, and then armpits. So anything over this 79 or whatever would be really bullish. I think we're going to go up and try to complete that move. But again, that is on a weekly basis, the chart, and the 78.80 area is wide open here. Let's look at PSXP. I was lucky enough to get my mother in at the 56.70, 56.62, something like that. And we took profits when we pulled back. Unfortunately, I'm not in anymore. I probably still ought to be. Pretty at the time it was over 6% dividend payer, but we made a few $100s per share. So You know, with oil taking off, it had already been a bit of a move. All times highs here. The PSXP is one of those you want to keep on your permanent watch list for a position trade, in my opinion. We've already covered Visa. Let's go look at XLK. Now, why do I have an ETF on here? I have an ETF on here because I use my ETFs to try to figure out what's moving, what's hot in the markets. So then what I could do is I could use TC2000 components, go over here, I look at market cap, and I sort by market cap. I start with the biggest market caps, and then start my way down. And obviously we've been in and out of the room in Microsoft. There's your Visa, there's your MasterCard. Intel, surprised they're still up there, but okay. Cisco really surprised me here. Oracle, kind of hanging around. It's not. Adobe, after the last earnings, where we did the gap up back here, it's done well. CRM, Salesforce, nice. Nvidia, it's doing pretty well, and then ACN. So what I would do is I look at the X sectors. Let me go over to here since we're really done with those. All right, I have X sector ETFs and X sector plus. The plus has somewhere in the neighborhood of 50, but let me just take the smaller one, which only has 22. And if I just look and see what's hot, obviously oil and gas related, real estate related, which is unusual. That's a one-day move, primarily due to kind of interest rates. Over 39, that would be interesting. Again, more real estate, utilities, consumer staples, industrials, things like 3M. Trying to remember the others that were moving. Clorox was on the list. Home builders kind of going nowhere. Here's the weekly chart, but they're kind of stagnant for the last 2 or 3 months, really. Obviously, gold. And by looking at this, it could help me find out what are the hot sectors. Okay. Let's go on over to the shorts. Don't have nearly as many of those. Alphabetical order here. Aaron's rental. You see how I had this as my area that we're going to watch. And right now, I don't do anything unless it breaks above this area, and then it becomes a long, moving to about 66, or if it moves below this 57 or so, it's going to go lower. My take on this, reading the charts, is that this is part of a bottoming process before the February earnings. Now, don't know what's going to happen on the earnings. It could continue to go lower. But I think what's happening is it's trying to put in a bottom right around here's the 56. But anything goes as far as something. If we blow through the 56, watch for some follow through. Right now, we've held it. We came down and did it once. We hit it the second, third, and the fourth time. Now, there's one of two things that's going to happen. One, it could be chopping that floorboard and trying to get through it, or it's solidifying that as support, because every time it gets down there, buyers step up and won't let it go any lower. Price will tell us. Let the chart tell us what it wants to do. Here's AD&T. We broke on Friday below this $21 level. 19 or so could be in the cards, or even lower. Stochastics RSI says there's plenty of room to run to the downside. APTV, Aptiv, again, another auto parts sector. Let's look here. We did a down move, a bounce, a down move. expecting a possible bounce around the 50 period moving average and maybe a bounce up, and watch and see if it curls over again around 95-ish. And then not the ultimate target, the first target would be in this area right in here in the low 90s, and 89 to 90 would be probably an ultimate target for me because of all this. And that would be the rising 100, which there's some area in there where some hedge funds like to use the 100 period moving average as a potential buy area. Court Therapeutics, we went down. We did the rally, the little bear flag here. So you can see this move, and then this little rally move up to 1385, and then we've kind of dribbled and drabbed our way south. I've had this on the short list, if you can tell right here, for a couple of weeks now, but we haven't really busted down to the downside, but we have moved about, 10% or so. Keysight Technology. I think if Keysight breaks this $100 level, mid to low 90s is in the cards. You can see right here, if you look at the EMA only chart, how we were in a move up, pull back, move up, pull back, move up, pull back. Oh, wait a minute. We didn't make a new high. And that's what I'm looking for here, is that the highs here are lower, the lows are lower or not quite, and then this one, we've got that kind of trajectory, kind of a channel. I'm seeing us bounce along in the channel, and I think it's going to continue. If we break the $100 level, we'll break out the bottom of the channel, or at least skew the bottom of the channel lower. CarMax, KMX. Nice move down on earnings, or bad move down on earnings if you were long. It could not even bounce. The problem with CarMax is probably only going to go maybe $2 or $3 to the downside before we get a bounce. Probably want to see if we could get some sort of rally to the $90 to $92 level or so, and then for it to fail. And then you'll have a target, and then a potential longer term target. Kind of hard for me to find a lot of good shorts here. Most of the stocks are still in good solid uptrends with minor pullbacks because of the stuff that's going on in the world here. Now, Tractor Supply Company, we basically gone from down, slight grind higher, and if I go over to the weekly chart, you can see how it's moved lower. Sharp down on their earnings there, and then there's the rally and the failure. It's possible that this would only get down to about $89 to $88 and retest this low over here, and then try to hold. But then we come up on earnings again, and all bets are off. Okay. However, this $80 to $81 level is wide open if we can break this level we've got there. Well, how come my thickness is gone? Huh. Let me see. There we go. Okay. Next one on the list is UNM. Continuation of a pattern on a 3-day chart was back here. What we're looking, I'm going to go ahead and take that off now. We're kind of, okay, let's look at it. Now, you know what? This one's kind of iffy unless we can break this level here around 28.75. This is looking like it was a bounce. Whoops. Move down, rally to the mean, and then maybe go lower. If we break the 28.75 area, we're probably going down here to below 27. Again, that's what I'm seeing on that one. Valero. Now, this one seems to be somehow resisting the urge to go higher. The only thing I can think of is that possibly these guys that hedged their oil and sold the contracts out, so they were locked in already. Just possibility. Let's look at the 3-day chart. It still does look pretty good and still pretty ugly on the weekly. As you can see, again, highs, lows, lower high, lower lows, lower high, lower lows. Where are we headed to? I think that's the area we're headed to, right in here. So this is a long term. We're talking since the end of October. Really started to move down in mid-November, and it looked like it's accelerated on Friday when we broke through 92.5. Would be nice if we could get another day or so down and then get a rally back up into the 92 to 92.5 area and then it roll over again. Those are ideal, and that's where I'm going to talk to you a little bit later about being patient and letting the trade come to me instead of jumping on it right now and then having to take the heat as it bounces. Let it bounce, then let it roll over, let it prove that it wants to go lower, and you get a tighter stop. Last one on the shorts is where Whirlpool. Sorry. Now, Whirlpool's not the greatest of shorts here. There's the 3-day chart, and there's the weekly, and that's kind of where you're seeing it. I'm looking at the possibility of, say, 130, 131 area down here, because we're making lower highs and lower lows, but we've got to make a break here. Balance of power is not good. Stochastics, it couldn't even rally again. So some of these shorts are really pretty good. Some of the shorts are not so fantastic. All right, let's look here. Let's go back over to. All right, I've got some personal goals that I would suggest everybody else look at it. I've got some personal goals for 2020. Number 1, number 2, and number 3 on the list are be patient, be patient, be patient. Let the trades come to me. I have a tendency to want things to happen quickly. I see them and I go, ooh, 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 ooh. No, no, no. Let the trade come to you. Let it come down. Let it bounce. Let it reestablish the downtrend if it's a short. And then as it rolls over, I can go short with a tight stop. And I also have a built-in target. Or if they're longs, let it do the pullback. Target, long with a short, really tight stop. Target number 1 and target number 2. All right, let the trade work. Don't sell too early. Like I did with PSXP. I sold anticipating that it was going to top out because it went to dojis for 3 consecutive days, that was it. That was the end of the move. No, it just meant that they were having to work their way through the resistance. I need to have a full trade plan before entering. I do identify targets and risk reward or reward to risk, and I sometimes push the reward to risk ratio and hence not follow my rules. Rules are there for a reason. You've done it because you've analyzed things, Steve. You've analyzed things and that's where you make your money, or if you violate these rules, you will have a devil of a time making money or not losing money. And I want to dedicate some time each week, I'll put it on the schedule, to do trading research and education. I've been trading for over 25 years. I'm still learning things every day. Or I'm either learning something new, or I'm relearning something, or reinforcing something that I already heard about. I want to analyze each trade to eliminate mistakes. Cut them down. And if I succeed in even getting closer and closer to my goals here, my profitability will increase. Guaranteed. It has to. All right. I said I'd give everybody an opportunity at a offer that I don't think you can refuse here. And for those who have never done a trial to either hit and run candlesticks or right way options, you could get 2 months for the lowly price of $49, less than $25 a month for 2 of the best rooms out there on the net. Trust me, I've been in a number of them since around the year 96, 97. And this is by far the best room that I've been in. The set of rooms. Doug's probably the best options trader that I've ever met. And Rick has this way about being calm and letting the trades come to him and not getting flustered. So I want to try to learn a little bit more this year from both of them. And I invite those who have not partaken in the trial offer, try one of them for 2 months and see if you like it. If not, bounce over to the other one. All right. If you want to follow me, I'm on StockTwits with Top Gun Trading. I don't tend to put out a lot of stock tips or anything like that. I'll put out a few, depending upon how much time I've got, what it looks like, and whether it looks like we have room to run still. I will sometimes put them out there when it's a good trade and I have basically a learning point. Some people on StockTwits will bash me for that, saying, "Oh, well, it's 20/20 hindsight." Well, no, it's really trying to do. It's a way for me to share with the community out there, and those who don't want to take advantage of it, I'll ignore them or block them. And every week when I do these, I get a video out on YouTube and Top Gun Trading. So youtube.com/Top Gun Trading. About an hour to hour and a half after we finish here, I'll have finished the rendering and uploading, and you'll be able to review any of the points in this video that we recorded this evening, or stuff that I've got going back a couple of years. I think there's a lot of good things out there. Now, do not put your stock symbols out yet. General questions. Anybody have any general questions? Not stock specific. Where on the website is the 3/8 trap covered? That's a good question. Jerry, I really don't know where the 3/8 trap. If you go off to Right Way Options and search for 3/8 trap, I don't think it has an X in it. It's maybe a 3-8 or just trap. Yeah, thank Glenn. I was just going there. I think it'll be on one of his videos. It'll be a 1-hour session. Okay, and then Ricardo asked, why is the float important? That's a good darn question. Okay, let's go to one of these. All right. Let's take CarMax, for example. I don't know what the float is, but let's just say that the float here was 15 or 20% short, a huge amount, or we even know one really, Bed Bath and Beyond. Bed Bath and Beyond still has 49% of the float short. Can you imagine? I don't know where people got short this puppy, but along in here, the people that went short along this way down, or down in here, it had 60% when it gapped up here. I'm going to show you what happened. It started going down after the last earnings back here in April. Then it started a little bit of a rally into earnings, and a lot of stocks do that. They start to get a little bit bullish. The stockbrokers start pushing the stock, whether they think it's going to go up or not. They just want to sell and get commission. And suddenly it gaps up 20%. Can you imagine what it would be like if you had 10,000 or 100,000 shares of this short? Where are you going to put your stop? Well, you and I might put it a little close. We might have it at 11. Some of these guys who are position holders may have it up here at 12. Some could have it up here around 13 and a half. Well, let's just say that I gave it a lot of room, and I've got some that I would start bailing around 12.75 and 13.75. Those are the two areas I said, if it gets over that, I've got to start covering. Why? Because I'm starting to lose money, and my boss is going to be on me like white on rice. He's going to say, you're starting to get underwater on this puppy. What are you going to do about it? We got to control this risk, because this thing had a negative view of the investment community. Most of them were negative on it. Then suddenly it surprises either to the upside, or maybe its earnings weren't as bad as expected. So therefore the stock shoots up. What kind of people are interested in purchasing it? Well, the people who were already long are going to hang on to it. They may take some profits here, some of them, but greed takes over, and a lot of these guys are going to say, well, I'm going to try to wait till it gets up here to $12.50 to $13. Oh, new CEO? Okay. But what's going to end up happening here is that new people are going to look at it, as well as the people who had it and said, oh yeah, it's coming around, I'm going to hang on to it. Then you're going to have new people interested because they were sitting on the sidelines waiting for proof, in quotes, that it is going to turn around. And the third group of people are the ones who are short. Now let's watch what happens to the stock. Once we get these gaps, a lot of people say, it's gapped 20%. I can't go in there. It's up 20% in a day. Well, if it has high short interest and we gap up and it's against the trend, this is why I like earnings, because these are trades that is almost printing money for me. Because I can wait for the next day, and if it gets over the body right here and gets to 12.25 to 12.50, I can go long. I can set my stop in pretty darn tight, relatively, and have a high percentage that it's going to go up to around 13 and a half. Well, we went up the next day, gapped up towards the high there, and you notice how the volume and balance of power are both good. It turned around the next couple of days. It did a pullback. Where did it pull back to? Pull back to basically the gap up level. And what I do is I fill in that in totally. Let me try that again. Why am I on thin width? All right. In my mind, I draw the box here. This is a wide range bar. And when I see a wide range bar, I'm thinking of the possibility of a 45-degree rudder. I'm looking for a potential to a 45-degree rudder with high percentage of the float short. If I see a pullback here, how far is it pulled back? People say, oh, it's pulled 100% back. Well, it did from the breakout point, but from back down here, it's probably only pulled back about 30%. So that's, if I showed you a pullback where it had lines like that and then did a 30% pullback and then started to go higher, would you be interested in it? Yeah. So we have to fill this in with our minds. We have to say that even though it didn't trade there, it really does have that move. So this looks like a bull flag to me. And sure enough, it acted as a bull flag. And it acted as a J hook. Did a move up, pull back, move up, 12.5, stop would be down here with targets here. What you have to do, it took me, I'm a little slow learner. It probably took me 3 or 4 years to figure this out. I knew earnings, but I didn't necessarily know about the 45-degree runners. I was in the camp that said it's gapped too much. And time and again, I'd come back and look at these and say, well, I would be bouncing around. I go, oh, this one reported earnings 3 months ago, and now I see where it's at. Man, why didn't I get in? Well, I analyzed it. I wasn't getting in because I thought it had moved too much. Then I said, well, what's causing it to move? Well, it's the percent float. It's the gap against the consensus and against the trend. Duh. And I finally put it together. There's August, September. There's November, December, and current. Let's look at EMAs. That's on the daily chart. And you can see we're doing a little bit of a pullback, and that's the 8 and the 17. All right, that's where we are at the moment. But I was showing you back here where it would move, not necessarily where it is at the moment. October, November. So September flattened out, October, and it did this huge move. We have to be able to see and learn. This is the learning part in education for me that I've done already on this one, but I want to apply some new ones, is go back and say, what happens when this occurs here, like Bed Bath & Beyond does a gap up? Well, it's got 49% float, and it's coming up on earnings again. Its current its current trend has been up. And Bed Bath & Beyond reports when? We say that was this coming week. Trades on Thursday, basically. So coming here on Thursday, if it pulls back to this 15.25 level and then starts to gap up, I'm going to look at anywhere between $17 to $18 as potential long. However, if it gaps below that, it's not a short because the longer term trend is still up. Okay, so that was a long way of trying to answer Ricardo, your question about float being important. Thank you very much, George B. Is there code on site for the pop out of the box for TC2000? I don't think I have an easy scan for that. I have a couple. I like the looser one. Now, this is based on a daily chart. The reason I did not know necessarily whether I had these is the LTA scanner has them in real time. And so therefore I've transitioned most of my scanning for the LTA scanner during the trading day, and after hours and between on weekends and the like is when I'll use TC2000. But I could highly recommend the LTA scanner to anybody out there. It seems like it's pretty expensive, about $145 to $150 a month. I used to pay $300 a month. I was happy with that one. The LTA scanner comes along, cuts the price in half, and is better. There's no two ways about it. Okay, I'm gonna pick. What was that ping? Jeff's asking about how you pick out targets on stocks that have some limited history, like there's nothing above. But picking out a target also for stocks that are going to all-time highs, you don't have any reference to the left to say where would it go up to. Now, back when it's down here around $16, we could look at $20 as a target. But once we get over $20, all bets are off. What I tend to do is I use a Fibonacci expansion. I do a Fibonacci projection here, and if I've got this projection up here, and where is that? Come on, baby. All right, there it is. And then basically I'm pulling out the bottom here. This is saying that 100% would make it to 2450. That's where it got. 1.382 expansion, 1.618. It got on this one move right here, right at 100. So sometimes they'll go to 38% beyond a one-to-one move. Now the other thing is, a lot of people who don't use Fibonacci's will say, well, this is a measured move, so my next move up from the bottom ought to be the same. And it was. I say most of the time you're looking for a 1.382 on the first expansion. Well, it only went up 1-to-1, but if we took it back down to here and took that as the move, that's what I would have expected. 1.382. 1-to-1, really. So, yeah. What would my target be on ping? The target has already been hit. Now what we have to do is we have to decide whether delete that puppy, go in here, and let's take it from around there to here, and to there, and it says 28s potentially. Now it's the second move up. This first move up had lots of balance of power positive, not so much here. I don't think it will. If it only did 1-to-1 this last move, I'm not sure this will even get 1-to-1, because the momentum is just, and the enthusiasm is just not there. Let's create a parallel line. And 28 bucks, maybe. I don't know. It's really kind of tough, but that's what I use to come up with a projection. The one that I can count on is the prior swing. Now the whole idea was that when it pulled back over here, my first target was right here around 22.75 or so, from around 21 with a stop under it, and it did gap down, and we tried to use it did gap down and then moved down and then bounced. We try to use the closing prices if we possibly can, if you can hang on, because when they come back, all this right here is kind of a stop rate. So, is the reward to risk good enough here? Was the pullback? It was flat. It wasn't really a pullback. Let's go look at a 3-day. See, that's pretty flat. See what the weekly looks like. You know, this is awfully flat. So therefore, it's not as much of the zigzag bottom that I normally like. I like to see a good V move. Strong move up, pull back, and a V bottom. So when it starts to move higher, it moves higher. This one didn't pull back enough. So this is one that's just kind of, you know, it's on my list, but it's not the strongest on my list, if you know what I mean. Let me manage the drawings here. All right. CEO Awesome 8th. Where can I find the percentage of float short? Okay. Let's go look here. Pull over here. Shortsqueeze.com. Let's look at Bed Bath & Beyond, 48.92%. Now, that was a few weeks ago. It could be delayed anything from 2 weeks to 6 weeks. But I use a number greater than around 10%, plus or minus. Anything over there. Now, people like the stock screener in FinViz, it also has an ownership number on the float short. And you can find things like HiQ, 78% short, Telray, 75% short, Planet, PLNT reports this week, 74%. I didn't notice that one. Is that on? No, it isn't reporting this week. Oh, wow. All right. So I try to keep getting track of this. I didn't in this one. I kind of like where it was at. Okay. And it just kind of, you got to try to remember these things. When I create that watch list every night and modify it every night. And a watch list is a watch list. A watch list is not a buy list. It's not a sell list. Okay. But it's one I got to keep an eye on. All right. So the 49% float short. Did we say that was Bed Bath & Beyond? All we were trying to say, Bob, was that if there are a bunch of shorts and it gets over about $17.80 to $19, the people who are short are going to be motivated to cover. And a lot of this grinding higher rally is probably people that are finally getting fed up with holding on to a short that's not making money. Now, let's see. There's a monthly chart. Could some of these people be short from 60 or even 50 or $40? Yeah. So a lot of these people are potentially short from a long ways back. But at some point they'll say, you know what? I've already made the money I'm going to make. Let's just take our profits and leave. They could be incrementally getting out of them like we do. but they're not a short-term trader. Okay. All right. No more questions from the peanut gallery. Put out one stock only. Tell me whether you're long or short or looking long or short. You're welcome, sir. John Janko wants to look at Target short. Here is my overall philosophy on short versus not short. That right there, remember, I would consider that just a huge run up on huge volume on earnings, and it went sideways. Now, let's take a 3-day chart. You see how it moved up and ratcheted up? Look at the weekly, ratchet up. Does this look like a stock that's in trouble going lower? No. It's making higher highs, sideways, higher highs, sideways. That's on a weekly, big term basis. All right. Even though it's pulling back here, it might be a sell if you were long. But this is not giving me any permission to short. To be given permission to short. Let me do the width here real quick. Okay. I need for this to make lower lows and then lower highs. I need for it to zigzag lower. Well, I've got the move lower, but I don't have the zag yet. I've got the zig but no zag. So I'm going to have to wait. I'm going to have to be patient. What's the other thing that's going on? Well, the 50-day moving average is still moving up. I think if you ask Doug, he won't short anything. I know Ed doesn't. Ed won't short anything that is above the 50 period moving average, meaning it's going up. It's rising. He won't go long anything that's below the 50. That's Ed. And actually, if you use that as a rule, it would probably keep you in good stead of being mostly on the right side of the longer term trend. So I look at not only the short term trend, which in Target is down, I agree, but the longer term trend is not, at least not yet. You could put that on your watch list and see if it changes character. But right now, I don't see it as a short. Sorry to make that so long, but thank you for the opportunity. I wanted to talk about shorts and longs. IPHI, 12% of the float was short back here, so we'd have to check it. Let's look at a 3-day chart. Let's look at a weekly. It's just kind of grinding higher. I don't see any big impetus on IPHI or INFI. No, you thought I'd heard of them. I kind of see this kind of meandering. Let's look at the EMAs. There's a grind higher. And maybe on a move over about 77. Jonathan B wants to look at hunger or hanger. I didn't know I've never heard of that before. It's not new. Really, really strong move since October. Good bullish engulf on Friday with the markets down. Yeah, anything that moves higher above 28 is probably worth a breakout shot. Now remember, lots of breakouts fail. In fact, I would say more than half of them come back and at least retest their breakout area. So they'll go higher, not necessarily the 30, maybe 29 or so, then come back and then hold. Doug, and I tend to agree, Doug likes to wait for this retest and see that when it comes back, whether it retests the breakout level or above that, and does it curl back up, this is when he tries to go long. And then he has a tight stop. I totally agree with that. So you might get, say, a partial position in this one, half or so. And then if it doesn't pull back, you're in at least half. If it pulls back, you still have the opportunity when it comes back to add on to your position. And you add on to positions when that was part of your original plan, that you don't add on to a full position. Okay. Glenn Atkinson looks like a PG short. The Procter and Gamble. Now, Procter and Gamble is starting to change character here. But I will say the same thing with Procter and Gamble. We probably need a reversion to the mean bounce. By that, I'd love for it to bounce up in here to about 123, 124. Then roll over, and then you can go short. You'd have a tight stop. Or if it goes sideways for a few days and then fails. The way it is right now, where's your stop? Well, if you use the volatility dots, it's 125-ish, and this is just 2 candles back. So pretty tough. That would be. Now, if you went short here, let's look at this. One of my goals for the year. If I went short, let's just say I could go short at the current price, and I use a stop of 125, and I use 122.50. I have a risk of $2.50. Well, what's 250 below that? It's 120. Can I get to 120? Yeah, that's 1 to 1. What would I have to get to 2 to 1? Well, I'd have to get $5 under 122, so I got a 117 and a half. I'd have to get through this level here, and I'm not sure it's going to make it. So what I'm looking for is that I can get a 1 to 1, but I really want 2 to 1, maybe 1.5 to 1, but let's call it 2 to 1. If it doesn't meet that 2 to 1, it doesn't meet my rewards. Where could it meet a 2 to 1? If it does a bounce, see, I'll have 125 as a stop, but my entry would be, say, 123.50. So now it would be only 1.5 versus 2.5. So now I only need $3 lower than 123, 120. I think I can get that. So you see how I'm using my reward to risk ratios. Okay, let's look at light. And now you see why I don't have a whole bunch of shorts. Is because they don't have the good reward to risk ratio at the moment. Light did a little bit of a breakout the last couple of days. Bounce of power showing. Good volume. Communication equipment, 187 moves 2.5. Yeah, I can see what you're looking at. Where's your stop? Probably got to be down here at 79.65. All-time highs, so we really can't do much of a projection. I guess one could say that's the move up, but I don't know. Is that your pullback or not? You see, it was flat. So let's not use a Fibonacci projection. Get that down there. Delete. Let's use these. Now it's going to be parallel in distance and time. won't let me go over there. So if this time right here was 3 weeks, sorry, not 3, 12 bars, yeah, 3 weeks, then I would expect this one to be 3 weeks long as well, or so. So if you're okay with that, and where your stop is, it moved up 15%, $10. Wow. So $10, and yeah, you could, you probably have the good reward to risk ratio, but I don't know I'd be putting a whole lot of shares in there, but okay. I've never heard of that one. All right. I'm going to cut us off here so that I can go out and get some dinner here in a minute. ARNC, I appreciate everybody being here tonight. I know I'm going on for a little bit here and pontificating. This one looks to be more consolidating than anything else. It's probably trying to consolidate the move that it had. Industrials don't tend to have huge moves, and it moved up 20% in a couple 3 months. But I see what you're looking at. Now, let's look at the weekly though. Is that 4 days? That's 5 days. Looks like it's going kind of flattish. I'd make it break out over 32. It's not going to be all-time highs. The all-time high is around 40. So you've got enough. You got enough in if you wait till 32. But then you're going to have the problem of where's the stop and where's the reward to risk. It could get right back up there to 32 and stop again. Okay. Bob M wants to look at blue. Blueberry Bio. Right about a breakout. Moved up, pulled back. Here's where I normally try to get in on the second move up, and it kind of fizzled out. However, 3-day chart, 5-day chart, they still moves 5% a day, Bob. It moves $4 a day. Woo-wee. Don't know what the options are, but they're probably pretty expensive, and may not be all that good. But if it can get over 95, it probably goes to 105 or higher. The round bottom breakout works. Yeah, and you can see why it stopped really just under 100. Had some people who were motivated sellers from back here in September. I see what you're looking at, but that's still not a buy unless it gets up over about 89.25. In my mind, it has some promise. Sal wants to look at Win. Not Wyndham. Oh wow, big turnaround here. Got up to here, ran into sellers. See where the prior swing was? See where it consolidated here lately? That's because there were motivated sellers from here that said, oh, please, Lord, let me get back to even, and I'll never, ever, ever do that again. The next level's right up here around 150. So that's really our target for the moment. You can see why it came in there. Let it give you a buy signal. Right now, it's not quite a buy signal. I can see how you could say this is kind of a mini J-hook on 3 or 4 days, but it isn't. 3-day chart is a move up and sideways, so I see what you're looking at on 3 days, kind of a move up, move 1, move 2, move 3. There's move 1, Move 2 is sideways. Move 3. I can see what you're looking at. ICE. Let's look at a single day. Oh boy. Nice move on Friday. I'd probably make a break at 95. Maybe even 95 and a half. This one's been weird. Yeah, this is kind of consolidated since September. I kind of make it break out about 95. It'll probably go higher. V. Sharma wants to look at Tesla. One of the cult stocks. Wow, 440. Last time I was looking, it was in the 200s. Okay, finally broke out above 350. This is not one you'd want to be chasing, especially with what looks a little bit like a shooting star type of candle with a move down. Wait for the next pullback and then move back up, buy signal like what we had here 3 days ago. Move up, go sideways, and then break out. Something like that. I think it could pull back easily to 430 to 435. Be patient. Be core. Blue Cora. Where's it going to pull back to? I'm going to assume B Core long, Rick, and then you got to get a buy signal. This is what a lot of the market stocks are setting themselves up for. Yep, they're okay. That's why we got sellers right in here from back in August, the bottom of this area right in here. Wait till we actually bottom out. We probably got another day or two to the downside or sideways. And wait till you get a bullish signal, probably at least over $26. That's what I'm seeing. COP, yeah, one of my favorite ones. ConocoPhillips. With oils going up, like the big integrateds are not. XOM, Chevron, Texaco, not. Some of the smaller ones, Valero, definitely not. The pipeline guys are doing really well. Oil and gas midstream. The oil and gas integrateds are not doing so well. And this exploration and production, I don't know. Look at larger, larger caps. CEO? Oh, CDOC. Yeah, that's China Oil. EOG's really doing well. C&Q. Oxy. There are better ones than COP. But I can see what you're looking at. Wait for a pullback. This is not a bullish candle on Friday, really. It may be totally negated when we open tomorrow, though. Ricardo wants to look at Starbucks long. Starbucks got to get over this 89.25 level. You notice I've had it marked. And then it's going to probably have to fight to this area from 92 and then 95 or so. Let's look at the EMAs. You can see how it's bottomed out in November. There's a November. Let's look at 3 days, and you can see how the bottoming in a weekly. The bottoming's happened. So what's it going to do now? Don't know. Is it going to just continue to wallow in the area, say between, get rid of that, $82 and $90? It's possible. We could have established ourselves a trading range. But if we break out above that, we may establish another trading range above. CTST. All right, CanTrust. Oh, is this the cannabis stock? A dollar stock. First of all, Reggie, I don't do anything really below $5, and that's because institutions can't invest in them. Large institutions. And stocks that are below 2 are what I consider penny stocks. They can be manipulated big time. So therefore, I tend to stay away from them. However, you've basically had the bottom here. Based on the volume here, we wanted to try to go back up to 150. But let's go to the weekly chart. Oh no, let's do that. There's a weekly chart. Even with the rally that we've had lately, it was up at $10 and it got 90% of its value whacked away. I don't like to normally trade in these for that reason. Stocks are $1 or under $5 for a reason. And so I tend to steer clear of them. It's easier for me to follow the footsteps of the elephants and see where they are. When the elephants jump in the pool, they make a big splash. And when they get out, the level of the water goes down. And I can see that as well. When little guys and small amounts in here, I can't tell. I can't read the tracks. Sorry. Hey, Dolores is going to get the honor of the last one. PayPal. PayPal's kind of going nowhere. See how we're just kind of sideways? EMAs say we're grinding higher. Do they? Huh? Well, I guess we are, but I'm kind of seeing that as a big range. Now, get above the top of that range about 110. Yeah, we'll probably go to 120 or so. Right now, it just doesn't move enough for me. Again, I'm impatient. Now, are you one of these people that wants to hold on to 6 months to get $10? Maybe. I don't know. I wouldn't. I'm just too impatient. Now, I've got others that I'll hang on there, but usually for my mother. Oh, Greg, you wanted to look at O'Reilly. Again, not a short. I'm looking at to go. This has been a sideways move. If I want to look at the weekly, that's kind of a bullish consolidation while it gathers more steam for the next move up. I would say no. I wouldn't even short it with your money. And Ricardo, you get the last question. Do you look for ATR or other parameters to guide the expected move? No, not the expectation. But I look at ATR because the ATRs, I use it as screening. If it doesn't move 25, 50 cents, 75 cents a day, probably don't want to get in it because it's kind of dead money. But I do it to eliminate stocks that don't move. Well done there, Steve. No Walmarts in Iran, just Targets. All right. Well, I want to again thank everybody for being here tonight. It's a privilege and an honor to have worked with you this evening. Keep coming back. We'll have these every Sunday at 8 p.m. And if you have not tried a membership, please, please strongly consider it. Let us help you with your goals for this year. All right, you guys take care. I'll have this posted in about an hour and 15. Aloha.